Welcome back to Investing Talk Podcast.
Good to be here.
We've got a really interesting set of documents today, all focused on Comstock, a company that seems to be going through quite a transformation.
That's right. They've been known for real estate for a long time, but these materials, well, they point to a pretty deliberate move into innovative resource extraction and renewable fuels.
We have their 2025 investor presentation, the Q1 results from this year, a shareholder letter.
And some market analysis, too, plus a piece on metal trading trends more broadly, so quite a bit to go through.
It really is. And our goal today is to unpack all of this, figure out what's really key about Comstock now, understand these recent moves, and maybe get a sense of where things are headed based on what we have here.
Okay, let's start with the basics. Comstock, for years, a major player in real estate services, right? Primarily Washington, D.C. region.
Since 1985, apparently. They've built this reputation managing, developing, operating properties, especially those big mixed-use developments near transit.
And the sources really emphasize this. Their model is mostly fee-based, long-term contracts to manage and develop for others.
Which they describe as asset-light and debt-free.
Right. So it's a way to avoid, the usual risks you see in real estate development, where companies carry huge debts on their own buildings.
Makes sense. And they offer the whole package of services.
Seems like it. Development, construction management, property management, asset management, the full suite.
Serving who, mainly?
The client list looks pretty diverse. Institutional investors, high net worth family offices, corporations, government bodies.
Across different property types, too. Office, apartments, retail, hotels.
Even commercial garages and public infrastructure, it seems. Mixed-use, transit-oriented stuff is their specialty, though.
You mentioned the Anger portfolio. Things like Reston Station, Loudoun Station.
Those are the big ones. Huge developments built around metro stations.
Just how big are we talking? Reston Station, for example.
At full build-out, the projection is massive. Over 3 million square feet of office, nearly 400 hotel rooms, 200,000 square feet of retail, thousands of parking spots, something like 2,700 residences.
Wow. And Loudoun Station.
Also very large scale.
Good.
Hundreds of thousands of square feet of office and retail, about 1,500 residences, a big AMC movie theater built right at Ashburn Station.
Okay, so the scale is definitely significant. They know how to handle massive projects. That real estate background, it's clearly substantial, even with these new ventures.
No question.
So how's that core business been doing financially, based on these documents?
Pretty well, actually. The FY 2024 numbers show solid growth. Adjusted EBITDA, $11.6 million. That's up 11% from the year before.
Okay.
Revenue hit $51.3 million, up 15%. And net income saw a really big jump, 87% growth to $14.6 million.
87%, that's quite something. Operating cash flow.
Also strong, $10.7 million, up 19%.
So strong growth across the board recently. Has that been a consistent trend?
It seems so. Looking back from 2020 to 2024, the sources cite a 23% compound annual growth rate for revenue and an even higher 35% TAPI AGR for adjusted EBITDA.
35% IBRT CAPTR on adjusted EBITDA. That suggests sustained improvement in operational profitability.
Definitely.
Now, adjusted EBITDA comes up a lot. It's a non-GAAP measure. Maybe briefly explain how to use it.
Right. The company uses it to track their financial performance, look at trends, set goals. It basically starts with net income and adds back things like interest, taxes, depreciation, amortization, stock-based compensation, things that aren't direct cash expenses in the same way.
So it gives a clearer picture of operating performance over time.
That's the idea. The sources mention it's useful for comparing periods because it strips out some of those non-cash items.
Got it. Okay, that frames the real estate side. What about the overall size of the portfolio they manage now?
As of the end of March this year, 92 assets under management. That's over 10 million square feet.
10 million.
With a potential value over $5 billion when everything's fully built out.
And how much of that is currently operating versus under development?
The breakdown is 76 operating assets, 5 under construction right now, and 11 in the development pipeline.
So a large operating base, but still quite a bit coming down the pike. What's in that construction pipeline for the near term?
Mostly at Reston Station, set for delivery this year, 2025. There's a big JW Marriott hotel and condos project.
Okay.
Over 500,000 square feet, 247 hotel rooms, 94 condos. Then there's BLVD Haley Apartments and retail, 420 units, and an office building, 2 Reston Row, about 250,000 square feet, plus some retail called Jewel Box.
So added up, that's quite a bit of new space coming online very soon.
Over 1.2 million square feet just in that batch.
And the longer-term pipeline, beyond 2025.
That stretches out towards 2030. Again, mostly at Loudon and Reston stations. It's a mix more office, multifamily, retail, hotels. Adds up to another 4.1 million square feet or so, plus maybe 2,700 residential units and hotel rooms combined.
That depth in the pipeline certainly suggests the real estate services side has, legs for continued activity for years to come.
Seems that way.
But this strong real estate business is almost the backdrop now for this major strategic shift the documents describe. This is where it gets really interesting.
It really is. The main message, especially in that shareholder letter in the big move, separating their fuels segment, spinning it off into a new independent company called Bioleum.
Right, Bioleum. What's the reasoning given for that separation? Why not just keep it all together?
They lay out three main drivers. First, capital efficiency. The idea is each business, real estate and fuels, can raise money better on its own, tailored to its needs.
Okay.
Second, risk management. It isolates the, let's say, unique risks of the fuels business from the more established real estate side.
And third,
value creation. There's a stated belief that the two separate parts will be valued much higher by the market than the single combined entity. Some of the parts value unlock, essentially.
focus, tailored funding, better risk isolation, unlocking value. Makes sense strategically. And Comstock itself keeps a big piece of Bioleum.
Yes, they retain what's described as a substantial majority equity stake.
Okay, let's focus on Bioleum then. What's this new company all about?
Its focus is on making and promoting fuels derived from lignocellulosic biomass, wood-based stuff. They call the fuel Bioleum.
And they got funding right away.
That's a key point. As they separated, they also closed an initial $20 million tranche of Series A preferred stock financing, just for Bioleum.
Dedicated capital. So what's that $20 million going towards?
The documents say it supports ongoing development. Things like finishing the engineering, getting financing sorted, and actually building their first planned commercial demonstration facility. It's slated for Oklahoma.
A demo facility first. What kind of financial return are they expecting from that initial plant?
The target mentioned is over $30 million in annual operating income once it's up and running.
$30 million annually from the first one. What about the tech itself? How does it work?
It's described as proprietary technology. It takes underutilized woody biomass, forestry leftovers, wood scraps, and converts it into low-carbon fuels.
Feels like
Direct substitutes for gasoline, diesel, and importantly, sustainable aviation fuel, or SF.
SF is definitely a hot topic globally.
It is. And they highlight some strong metrics for their process. Carbon intensity, potentially as low as 15, which is very low, and high yields up to 140 gallons of fuel per ton of feedstock.
140 gallons per ton. How significant is that number? Does it represent a big efficiency gain?
Well, it's presented in the sources as market leading. That 140 gallons of gasoline equivalent per ton suggests they're getting a lot of fuel out of each ton of wood compared to perhaps other methods. It points towards better economics and resource use.
The shareholder letter used a pretty bold analogy, calling it a new kind of oil well, fed by renewables that never runs dry.
It's a striking image, isn't it? It emphasizes the sustainable, renewable aspect versus finite fossil fuels. Biomass can be regrown, harvested, processed continuously.
Of course, it's not literally an oil well.
No, it's a manufacturing process converting solids to liquids. But the analogy captures that idea of a potentially perpetual resource, which is a core part of their pitch.
And they see potential for big scale-up.
Definitely. The platform is designed to scale, they say, 10 times beyond that first facility. They want to bring in major oil companies. I mentioned integrating with energy crops, like something called hexes, suggesting you could turn farmland into, what was the phrase?
Perpetual sedimentary oil fields.
Right. Another powerful sort of futuristic image, cultivating energy feedstocks like crops.
So what are Bioleum's main goals for the rest of this year, 2025?
It's a busy roadmap. Finish setting up the separate company, close the full Series A funding round, integrate that Hexas fuel farm idea they acquired, pin down the exact site in Oklahoma, and get project-level financing for the refinery construction.
That's a lot on the operational side. Anything else?
Yes, also executing more licenses and agreements, boosting pilot production, and pushing forward on R&D. Plus, commercialization plans involving joint developments and integrating into existing infrastructure, forestry, agriculture, even petroleum to generate revenue streams like licensing fees, royalties, technical services.
Okay, so Bioleum is clearly a major focus. But the transformation isn't just about fuel. There's also Comstock metals. What's their angle?
Comstock Metals is focused on recycling, specifically a zero landfill solution for recycling solar panels and related gear from the renewable energy sector.
Zero landfill recycling for solar panels, and they got some kind of important certification recently.
That's highlighted as a big deal. They became the first solar panel recycler in North America certified to the R2v3 iOS standard, specifically Appendix G of that standard.
R2v3 iOS Appendix G. What does zero waste really mean in this context? Does that certification confirm it?
It does. R2v3 iOS is a tough standard for electronics recycling generally. Appendix G makes it specific to things like solar panels. Getting certified means they had to prove, rigorously, that every part of the panel, glass, aluminum, silicon, wiring, everything is tracked and handled responsibly. It's not just smashing them up.
So it validates the whole process.
Right. It validates that their process yields 100% commodity-ready materials, and crucially, that their downstream partners also meet high environmental and safety standards. No landfill, no unsafe processing down the line. It's about the integrity of the entire chain.
And they've shown this works.
They say they've demonstrated it using their own thermal methods, getting out usable glass, aluminum, and other fines. The facility's been running for over a year, and that audit process checked their downstream vendors too.
How's the business ramping up?
Seems to be picking up speed. They signed a master services agreement with RWE Clean Energy, a big player,
RWE.
making Comstock Metals a preferred partner. They've already taken in over 4 million pounds of old solar materials just from RWE. And the financials reflect that ramp-up Q1 billings this year were $1.34 million, way up from $0.2 million in Q4 last year.
That's more than a four-fold jump quarter over quarter. Shows real momentum. And there was another analogy for this one too, right?
Yes, the shareholder letter again, calling it a new kind of mine above ground, like a world-class silver mine using solar panel waste as ore that never runs out.
Another strong image. Mining waste streams instead of digging holes. Capturing valuable metals like silver and copper from panels, turning recycling into resource extraction.
Exactly. It frames it as sourcing raw materials, tapping into that circular economy idea.
Are they planning to expand this metals business?
Yes, big plans there too. They want to move to industry-scale operations at their Nevada facility in Silver Springs.
What does that involve? Getting bigger permits?
Getting expanded permits, yes. And they're actively looking for sites for 2 more recycling locations beyond Nevada.
So what are the key goals for metals for the rest of 2025?
Maximize production at the current demo facility, run 3 shifts. Secure funding for that first big Nevada site. They estimate needing about $6 million in CapEx this year, plus storage costs, and another $3 million next year to double capacity.
Funding is key. What else?
Expand local storage, finish the permitting for Nevada, buy and deploy the equipment, sign more MSAs like the RWE deal, finalize the sites for the 2 new locations, and keep working on R&D for higher purity materials.
Sounds like another very busy year for the metals team. They expect significant revenue growth here too.
They do. The projection is for billable revenue in metals to be 6 to 8 times higher in 2025 than it was in 2024. Expected to be well over $3 million for the year.
Okay, so we have real estate, Bioleum for fuels, Comstock Metals for recycling. What about the original mining business, the Comstock LODE connection?
The documents touch on it briefly. Still focused on their Nevada gold and silver assets. The plans for this year include monetizing some northern claims leases, asset sales aiming for over $2 million in cash.
So extracting value from legacy assets?
It seems so. They've also updated resource estimates for some areas, like Dayton and Lucerne, based on higher gold prices. And they're developing plans to upgrade the Dayton resource to proven reserves, while also looking at what to do with the land after mining.
Okay, sounds like they're managing those legacy assets while shifting the main focus in capital elsewhere. Let's switch to corporate updates. Any recent financial moves mentioned?
A few things. Back in February, they did a 1-for-10 reverse stock split.
Okay, why?
The explanation given is it didn't change equity or total authorized shares, but it effectively increased their capacity to issue shares if needed for growth plans. Makes sense if they anticipate needing capital for Bioleum or metals.
Right. Anything else?
In March, they settled a couple of old commitments by issuing shares, booking a small gain, and saying it strengthened their balance sheet. And more recently, April-May, they converted some debt, part of a KIPS Bay note, into shares. They did state they don't plan to use those types of notes going forward.
Seems like cleaning up the balance sheet, maybe simplifying the capital structure ahead of these big ventures.
Could be part of the strategy.
What are the big corporate objectives for the rest of the year?
Finalizing plans to sell off legacy real estate And other non-strategic investments, they're targeting over $50 million from that, ensuring overall liquidity. And critically, finalizing and implementing the plan to get the maximum value out of the Bioleum spinoff.
And they tie this back to the business model.
Yes, they reiterate that the fee-based, asset-light real estate model, plus the separate funding efforts for Bioleum and metals, should let them chase these new opportunities while keeping risk somewhat contained.
It definitely paints a picture of strategic repositioning, focusing the different parts, hoping the market sees more value that way. How is the external market viewing all this? What does the analysis say?
Well, the market beat analysis we have, dated May 25th, shows the stock price was around $3.05 on May 23rd.
Okay. And analyst coverage.
This is interesting. Based on the last 12 months, there's only one analyst rating available, and that rating is a hold.
Just one analyst covering them. For a company with this history and these new ventures.
It does seem low, but what's really striking is the price target from that one analyst.
What is it?
$26.
$26, when the stock is trading around $3.
Correct. According to the analysis, that represents a potential upside of over 750%. And it's the only target. So it's the high, low, and consensus all rolled into one.
But the rating is hold, not buy.
Right. And the analysis notes this same analyst actually downgraded the stock from outperform to market perform late last year, December 2024.
Okay, let's pause here. One analyst, a hold rating, but a price target suggesting massive upside. What could be going on there? How do we interpret that?
It's definitely unusual. A few possibilities come to mind. Maybe the analyst sees absolutely enormous potential value if Bioleum and metals execute perfectly and scale up as planned. The $26 might reflect that blue sky scenario.
But the hold rating reflects the risk.
Plausibly, it could signal, yes, the potential is huge, but there are major execution risks here. Funding, construction, scaling new tech. So maybe wait and see for more proof points before jumping in.
Or maybe the lack of coverage itself is a factor.
Could be. With only one analyst, that single opinion carries disproportionate weight in any consensus. It might just mean the company is underfollowed, maybe seen as too complex with the mix of businesses.
So the takeaway might be huge potential seen by at least one observer tied directly to successfully pulling off this green energy transformation, but considerable uncertainty remains.
That seems like a reasonable interpretation of those specific data points.
Okay, finally, let's broaden the view. We have that piece on metal trading trends. How do Comstock's new focus areas, renewable fuels, metals recycling, fit into that bigger picture?
They fit very neatly, actually. The metal trading discussion highlights the global energy transition as a huge driver. Moving away from fossil fuels means massive demand growth for critical metals.
Metals like
Copper, lithium, cobalt, aluminum, zinc, rare earths. All essential for things like EVs, solar panels, wind turbines, batteries.
and supply is struggling to keep up.
That's the issue. Traditional mining faces challenges, capacity limits, geopolitical risks, environmental pressures. This supply tightness makes alternative sources, especially recycling, much more important.
So Comstock Metals, recycling solar panels to get back some of those very metals, that directly addresses this trend.
Absolutely. They're positioning themselves to create a supply stream from a growing waste source, feeding materials back into the renewable energy sector that needs them. It's very aligned.
And Bioleum's fuels.
Same story, different angle. The push for lower carbon energy and energy security is global. Bioleum's focus on converting biomass into fuels, especially sustainable aviation fuel, hits right at the heart of that decarbonization effort. These are areas attracting huge investment and policy support worldwide.
So bringing it all together, what's the final picture?
It looks like Comstock is making a fundamental pivot. They're keeping their established, growing real estate services business in the DC area as a foundation. But the big strategic push, the focus, is on restructuring and capitalizing these two new ventures. Bioleum in renewable fuels, and Comstock Metals in renewable metals recycling.
And those recent milestones, the Bioleum separation and funding, the metals certification and RWE deal, they seem pretty critical to validating this new direction.
They absolutely are. They're tangible steps. And the stated objective, according to the sources, is that this whole strategy, creating more focused companies, each able to attract its own funding, will unlock significant value that maybe wasn't being recognized before.
It leaves you with a big question, doesn't it? As the world needs more clean energy but faces limits on traditional resources, will these mines above ground, like solar panel recycling or processes turning biomass into fuel, become just as vital, maybe even more so, than digging stuff out of the ground?
That really is the core thought, I think. Does our definition of valuable resources shift towards reusing, repurposing, and converting renewable matter, rather than just extraction? Is a potential long-term shift in how we source materials and energy.
A really interesting potential future to consider. This exploration was based entirely on the sources provided, offering a detailed look at Comstock's strategy and potential. If you found this valuable, please do subscribe so you don't miss our future analyses.
And drop us a like or leave a comment with your thoughts or any questions you might have about this discussion. We appreciate you tuning in.